Good evening, students. Welcome to the session. I hope you have been revising what we have been discussing in the last class, as we have told you that these are revision lectures and not like the full-fledged lectures. So you have to utilize the maximum opportunity to get your doubts cleared, to practice more and more questions, because this kind of lecture that we are having right now is to make you practice for your examination, not just to like revise the topic. So let us just quickly start on that note. In the last class, what we had done was we had done the MAT, we had done the tax rates for the company. What are the different tax rates? Can somebody quickly revise it for me so that it will help you to revise also and will also benefit the other students? What are the tax rate for the company? What are the MAT provisions? Have you revised it? And if yes, you can take the lead in just giving a quick recap of the particular topic. Yes, we had done the different tax rates, which is under 115 BAA, 115 BAB. We had also solved a full-fledged question on the 115 BAA, BAB, and the MAT provision versus the normal tax. Yes, we had also done the AMT in the last class, and we had solved a question on AMT versus the 115 BAC and the normal tax provision, what you should advise the client or the assessee as to which regime they should opt into. We had seen that 35 AD question. Yes. Then we had also seen the tonnage tax for the shipping companies. So we had seen all of these areas, right? We had also seen a question on the MAT, which is relating to the adjustments with respect to the Ind AS compliant companies. So that also we had done in the last class, yes or no? So these are the areas that we had covered. Has anyone revised or would like to recap before we move on? Or if you have any questions relating to the last class specifically, please feel free to ask me before we proceed further. Yes? Okay, so if there are no questions, we will start now with the taxation of the partnership firm. So what is the tax rate for the partnership firm, students? Yes. What is the tax rate for the partnership firm? What is the rate of surcharge? Yes, very simple question. 'What is the tax rate for partnership? 30%. Yes, Geeta. Yes, Leela. 30%, right? And the surcharge is 12%. Yes or no? So that is the tax rate for the partnership firm, right? What about the profits in the hands of the partner? We have the profits as exempt. Yes, Geeta. Above 1 crore, it's 12%. The profits are exempt in the hands of partner under section 10 to it. Right? Yes. And what about the remuneration and interest? What is the provision for that? Yes. What is the provision for the remuneration? Yes. You have not been revising enough. Yes, Geeta. So for the partnership firm, if you recollect, in the normal classes also we have discussed it. Yes, Leela. What are the limits for remuneration? Interest is 12%, you're right, but what are the limits for remuneration? So there are certain conditions for the partnership firm to claim the deduction of the remuneration and interest. What are the conditions? So number one is that the remuneration should be paid to what kind of partner? Yes. to a working partner. The remuneration should be paid only to the working partner. Who is a working partner? Yes. Who is a working partner? What is the definition of working partner? Working partners, yes, Geeta. Who are the working partners? Can I pay the remuneration to a company who is a partner in the firm? Yes. No, right? So a remuneration, can it be paid to another partnership firm who is a partner in the partnership firm? Can we pay the remuneration to them? No. If they are working in, yes, no, Leela. So remuneration which is there has to be paid to a working partner. Working partner shall mean only an individual. A non-individual cannot be considered as a working partner. Are we getting this point? So see, these kind of questions can be there in the case scenario based. Right? A partner other than an individual cannot be a working partner. So where a company is a partner or a partnership firm is a partner, the remuneration paid to them would not be allowed. What if the remuneration is paid to a director of a company who is a partner in a firm? The company is a partner in the partnership firm, but the remuneration is paid to the director. Will it be within the ambit of section 40B? No, right? Because it is not paid to the partner. It is paid to the director of a company who is a partner. So this will not be subject matter of section 40B. Under 40B, we are only covering the remuneration to a partner. Are we getting this point? So remuneration should be paid to a working partner. The remuneration should be authorized by the partnership deed. It should be authorized by the partnership deed. So any remuneration which is not authorized by partnership deed, or if the deed does not specify the amount of remuneration or does not lay the manner in which the remuneration will be given, until then the remuneration will not be allowed. So it is sufficient if the remuneration amount is mentioned or the way it will be calculated, it is mentioned. So it should be authorized by the partnership deed. If it is pertaining to a period prior to the partnership deed, again it will not be allowed. So even if the partnership deed is entered into, let's say, June, but the remuneration is given from the month of April. So from the month of April to June, the remuneration will not be allowed. And it should not exceed the specified limit. What is the specified limit? On the first 6 lakh, or in the case of loss, 3 lakh or 90% of book profit, whichever is higher. On the balance of book profit, 60% of book profit. What is the meaning of book profit? What is the meaning of book profit here? In net profit, add back the remuneration. Yes, Geeta. So the book profit here means the profit which is computed as per the provisions of the PGBP before deduction of the remuneration. That is the meaning of book profit. So book profit means considering the provisions of the PGBP. Whether I will set off the book business loss for arriving at the book profit. Yes. No. Business loss will not be set off to arrive at the book profit because book profit is the net profit as per the provisions of the PGBP. What about the unabsorbed depreciation? Will I reduce that to arrive at the book profit? Yes. Why we will allow that? Why we will allow this? Yes, Geeta. Yes, Leela. Yes, Geeta. Because it is considered or it is deemed to be the depreciation of the current year. So we will allow that. Fine. So that is how you will calculate the remuneration. Okay. And in the hands of partner, it is taxable under 28(5). Now, if remuneration is disallowed to the firm as an expense, it will also not be taxable in the hands of partner. Then comes interest on capital. Now, what are the conditions for interest on capital? Deduction for interest on capital. Same way, interest should be payable by partnership deal. It should not be again same as remuneration pertaining to the period prior to the partnership deal. And it should be payable not exceeding at the rate of 12% simple interest per annum. Now this 12% is on what amount? Yes, if I maintain a current account, a fixed capital account of the partner and a loan given by the partner. So this 12% is on what amount? Balance of both. It will include the current account, capital account as well as the loan given by the partner. Again, the interest shall be taxable in the hands of partner under section 28(5). If the interest is not allowed as deduction to the firm, it shall not be taxable in the hands of partner. Also, there is TDS under section 194T at the rate of 10% on the interest or remuneration exceeding rupees 20,000 paid to the partner. Clear? What if the interest is paid to the partner in a representative capacity? So, let's say for example, if ABCHUF is the partner in XYZ firm and it is represented by Mr. X, who is the Karta of ABCHUF. Now, interest is paid to Mr. X, who is acting in a representative capacity for ABCHUF. Whether this will be subject to section 40B? Fully allowed? No. It will be subject to 40B because the interest is paid to whom? To the firm itself. So to the HUF itself. Right? So if the particular HUF is a partner and the interest is paid to the Mr. Karta who is acting in a representative capacity, then in that particular case, it will be subject matter of section 40B because actually the interest is paid on the loan given by ABCHUF. However, in this case where let's say X has given the loan in personal capacity to ABC partnership firm and the interest is paid to him, then it will not be subject to 40B because here X has given the loan, which is not given by any partner. Are we understanding this? So where the ABC HUF, who is a partner, gives the loan, then it will be subject matter of 40B even if it is paid to the representative partner. But where the Karta, who is the representative partner but gives the loan in a personal capacity, not in the representative capacity, then 40B is not attractive. Or let's say, for example, X is a partner in ABC and Mrs. X, who is the wife of X, gives the loan to the ABC. And interest on loan, instead of giving to Mrs. X, they are paying to Mr. X. Whether 40B will be attracted in that case? No. Why? Why no? Because it is given to his wife indirectly, right? So this is not given to him in a capacity of the partner, but on behalf of his wife who has granted the loan. So in this particular case, there will not be any 40B attractive. Are we clear? Then in the case of partnership, shall lapse. And this only applies to the business loss, not to the unabsorbed depreciation. So if there's let's say loss of 3 lakh of ABC and the profit sharing ratio is 1:1 and C dies, then the loss to the extent of 1 lakh to the extent of share of C will lapse. ABC can only carry forward 2 lakh of loss. However, unabsorbed depreciation can be carried forward because 78 is not applicable in that case. Are we clear? Then, in the case of the partnership firm, which are the other provisions which are specifically applicable in respect of the partnership firm? So, in the case of the partnership firm, there is one section which is applicable with respect to the capital gain, which is that two sections in fact, which are the most two important sections. Yes. Yes, very good, Leela. 45.4 and 9B. What is 9B? Reconstitution. Yes. And the 9B covers what? Yes. Yes, Leela. Very good. And what does 45.4 covers? Yes, faster. No, both dissolution and reconstitution. So in case of 45.4, what does 45.4 covers? 45.4 covers only the reconstitution. 9B covers dissolution plus reconstitution. And what does it cover? That's a trigger event. That when there is a reconstitution, and 9B gets triggered when there is a dissolution plus reconstitution. But what is the coverage? What kind of asset when it is given? In that case, 9B and 45.4 gets triggered. Yes. Stock in trade capital asset, that is covered under which section? 9B. Yes. So 9B deals with the taxability on the receipt of a capital asset or the stock in trade by a partner from the partnership firm on the dissolution or reconstitution of the firm. So if it is stock in trade, it will be taxable under which head? PGBP. If it is receipt of the capital asset, it will be taxable under which head? Capital gain. And 45.4 covers the receipt of the, yes, 45.4 covers the receipt of the money and the capital asset on the reconstitution. These are chargeable in the hands of whom? These are chargeable in the hands of the partnership firm, both 45.4 and 9B. And how do you do the computation under 45.4? Yes. How do you do the computation? A is equal to B plus C minus D. Yes or no? Where B is the money receipt, C is the FMV of capital asset on the date of receipt, and D is the capital balance as on the date of the reconstitution of the partnership firm. However, if A is negative, it will be deemed to be 0. And in case of 9B, my full value of consideration will be FMV as on the date of receipt by the partnership firm. By the partner. Yes, under 45.4, it is actually the income of the partner which gets taxed in the hands of firm. Whereas under 9B, it is the income of the firm itself which gets taxed in the hands of the partner. Then you have to also consider there the deduction under section 48.3. What is 48.3? What is section 48.3? Yes. Deduction from FPC, but what is it? What is it the deduction of? What is 48.3? What do you deduct under that? It is the amount of revaluation which has been already taxed, which is attributable to a capital asset which is remaining with the partnership firm. That shall be allowed as a deduction when the capital asset is actually sold. So what you have charged under 45.4 now, and if the capital asset is not yet been sold off, so to the extent of the amount charged under 45.4 which is attributable to that capital asset will be allowed as deduction under 48. Plus you need to consider their rule 8AB as to how to attribute that, and the CBDT circular of 2021, circular number 14 of 2021, which tells you to increase the amount of the capital balance under D. So A is equal to B plus C minus D. So under the capital balance, you will add the post-tax gains which have already been charged under 9 so as to avoid the double taxation. Alright? So this you would have already done under the capital gain class. What additional provisions are applicable for the partnership firm? Conversion of the company into an LLP. Yes. So what is the capital gain on that? What are the provisions in relation to that? Conversion of company to LLP. Yes. Not a transfer. Yes, Leela, very good. It is not considered as transfer under section 47(13)(b), which says that any transfer of a capital asset by a company, which could be a private company or an unlisted public company, to an LLP is not a transfer. Or the transfer of the shares by a shareholder held in the company in consideration of the interest in the partnership firm is again not regarded as transfer. So it is not a transfer for the company, it is not a transfer for the shareholders of the company. What are the conditions with respect to that? So it is a conditional exemption. So what are the conditions that one needs to fulfill? Yes, what are the conditions? The total sales turnover should not exceed, what is the amount? What is the threshold? Yes, students. See, students, you have to revise and come for the class. These are supposed to be the revision lectures, not the routine lectures. So if you have not revised, how would you, go through the topic? 60 lakh. Very good, Leela. So the total receipts in the business of the company should not exceed 60 lakh. In what year you have to see, Leela? Which years you need to see? Last 2 years? No. In the last 3 preceding previous years. In all the 3 preceding years or only in any of the 1 year, you need to see. Let's say, for example, in the year 1, I have 65 lakh. In year 2, I have 50. In year 3, I have 55. So whether the condition is fulfilled? All the 3. Very good, Leela. So you have to see whether the total sales turnover or gross receipts do not exceed 60 lakh in any of the 3 preceding previous years. What are the other conditions? Yes, what are the other conditions, students? Yes. Total value of assets should be 5 crores, should not exceed 5 crores. Yes, that's right, Geeta, very good. So the total value of assets should not exceed 5 crores. In which years you have to again see? Yes, in which year you have to see whether it does not exceed 5 crore? For the 3 years, for all the 3 years, right? Then what are the other conditions? All the shareholders of the company become the partners of the LLP in the same proportion as their shareholding was there in the company. Okay. Then the shareholders of the company continue to receive at least 50% of the profits of the LLP for a period of 5 years from the date of conversion. Yes, Lisa. So the shareholders should be entitled to receive at least 50% of the profits for a period of 5 years from the date of conversion. And no other consideration should be paid other than the share in the profit or the capital contribution to the shareholders. All the assets and liabilities of the company should become the assets and liabilities of the LLP. And after the conversion, no amount should be paid either directly or indirectly to any partner out of the accumulated profit of the company for a period of 3 years from the date of the conversion. If any of these conditions are not complied with, then the exemption which was granted to you would now be taxable in the hands of the LLP, and the exemption which was also granted to the shareholders would now be taxable in the hands of the partners of the LLP. Are we clear? Further, will the LLP be allowed to carry forward and set off the business loss and unabsorbed depreciation of the company? Yes. Yes, right? However, if you fail to fulfill any of these conditions, then even the loss or the UAD which was allowed to the LLP, which was of the company, would now be deemed to be the PGBP in the year of failure of conditions. Yes? Whether the MAT credit of the company will be allowed to LLP? No. Why? Why no MAT credit is allowed to the LLP? The MAT credit of the company, why it will not be allowed to LLP? Because the LLP is not liable to MAT. Whether LLP is liable to AMT? Whether AMT is applicable on the LLP? Yes. AMT is applicable on LLP. LLP, if it claims the 35 AD, if it claims the Chapter 60 deduction in respect of income, if it claims 10 AA, the LLP is required to even comply with the AMT. Yes, but it is not required to pay MAT because MAT is only applicable to the companies. So therefore, the MAT credit of the company will not be allowed to the LLP. Very logical. What about the cost of the assets, block of assets in the hands of the LLP? What will be the cost of the block of assets in the hands of the LLP? Same as in, what do you mean by same, Leela? Same as company? No. The cost of the asset for the LLP shall be the written down value, not the cost. Because the company would have claimed the depreciation till now. So it will be now the written down value in the hands of the company. That will be the cost for the LLP. And in the year of conversion, what will be the depreciation allowed to the company and to the LLP? Yes, portion. Yes, apportioned on what basis? It will be apportioned between the two on what basis? Yes, it will be apportioned on what basis? Number of days. It will be apportioned on the basis of number of days the asset have been used by both of them. Are we clear? And for the shareholders who now become the partners of the LLP, what will be the cost of acquisition of the rights in partnership? What will be the cost of acquisition of the rights in partnership for the partner? Yes, Leela, very good. It will be the cost of the shares. It will be the cost of the shares. Are we clear? Shall we solve one question on this point? Yes, any question till now to anyone? Okay, let us solve a question from the module itself. HIG, a firm consisting of three partners, namely H, I, and G, carried on the business of purchase and sale of TV sets in the wholesale and manufacture and sale of pens under a deed of partnership executed on 1/4/2013. H, I, and G were partners in their individual capacity. The deed of partnership provided for payment of salary amounting to 1,25,000 each to H and G, who were the working partners. A new deed of partnership was executed on 1/10/2023, which, apart from providing for payment of salary to the two working partners, as mentioned in the deed executed on 1/4/13, for the first time provided for the payment of simple interest at the rate of 12% per annum on the balances standing to the credit of the capital accounts of the partners from 1/4/2024. The firm was dissolved on 31st March 25 and the capital assets of the firm were distributed amongst the partners on 24/2025. The net profit of the firm for the year ended 31st March 2025 after the payment of salary and the debit and credit of the following item was 3,50,000. So let us discuss one by one. Interest amounting to 1 lakh paid to the partners on the balances standing to the credit of their capital account from 1/4/2024 to 31st March 2025. And interest amounting to 50,000 paid to the partners on the balances standing to the credit of the current account from 1/4/2024 to 31st March 2025. So let us first talk about this interest of 1 lakh. What will be the effect? Only 6 months interest is allowed? Yes, that's right. So here if you look at it, what they say is that the new deed of partnership was executed on 1/10/2023. Right? So the interest will be given for the period after the partnership deed, not to the period prior to the partnership deed. So here 1 lakh is paid from 1st April. So only 50,000 will be allowed, 50,000 will be added back. What about interest amounting to 50,000 on the credit balance, on the balance relating to the current account? Allowed or disallowed? How is it allowed? Look back and read the question carefully. Yes, Geeta, very good. It is not authorized by the partnership deed. So here they are saying that the 12% will be allowed on the balances standing to the credit of the capital accounts only. So the partnership deed is authorizing only on the credit of the capital account. This interest is paid on the current account. So this is not authorized by the partnership deed and therefore this will not be allowed. Interest amounting to 20,000 paid to the HUF of partner H at the rate of 18% per annum. Now, yes, Leela, good, allowed. So this is paid to the HUF, not to H. H is the partner. Geeta, H is the partner, not the HUF. This 20,000 is paid to the HUF, Geeta. It is not paid to H. It is not paid to the HUF on representative capacity of H. It is paid to the HUF in their own capacity. So therefore, in that case, the interest will not be restricted by 40B. The provisions of 40B will not apply to this interest. But which other provision can apply over here? Yes, which other provision can apply over here? Clubbing? No. Why clubbing will apply? How will you apply the clubbing provision? On what basis clubbing will apply? See, clubbing provisions are attracted, Leela, either when it is paid to the spouse or it is paid for the benefit of spouse or the daughter-in-law, basically in those cases. Here, how the clubbing will get attracted. Or where there is transfer of income without transfer of asset, even that is not the case. So which other provision will apply? Yes, students, you have to be participative. Others also who are joining in the class, only two people are answering. If you will not answer, how your mistakes will get corrected, students? Jacob, Sanjay, Jay, I can see you on the class. Please participate. See, if you start making the mistake, that's a good thing because then you can identify your mistake. आप जब mistake करोगे, then only you will have an opportunity to write it down in your book that okay, this mistake I should not repeat in exam. But if you're not going to participate, students, how will you learn? How will we correct you? So this LVRC is in fact an opportunity for you to correct your mistakes. So answer, let it go wrong. You are at the end the students. Right? So I'm requesting all the other students I see there who are participating in the lecture, please participate. Unmute yourself and participate. Yes, Geeta, very good. HUF is the relative. Yes, Jay, very good. Excess payment to a relative. Very good, Jay. See, if you're participating, you are getting the confidence also. HUF is the relative. Very good. So which section gets applicable in that case? Yes, Sanjay. Yes, Jacob. Which section gets applicable? Section 40. Very good, Geeta. 40A to B. Payment of expenditure to a related party. If it is more than the fair market value. If it is in excess of the fair market value. So here we will write, we are assuming that it is not in excess of the fair market value. Because in this question, the fair market value, the fair rate of interest is not given. So it is not more than the fair market value. And therefore 100% is allowed. But if you will write this point in the exam, students, you will get one additional mark. Right? Because the examiner will appreciate, oh my God, this person knows. He has the quality to become a CE. So this will give you a bonus mark. And will leave a good impression on the examiner. Fine? Next, payment of 25,000 towards purchase of TV sets made by a cross check on 1/11/2024. Yes, Jacob. What do you think here should be the answer? Yes, Geeta, correct. Yes, Leela, good. Yes, Jacob, good. At which section? Please start quoting the section numbers also. If you remember, even if you don't, you will start remembering. 40A 3. Very good, Leela. Very good, Geeta. Start quoting the section numbers. So under 40A3, the payment of 25,000 towards purchase of TV sets in cash, sorry, by a cross check is not allowed. Yes, good, Jay. Is not allowed as deduction. What should be the payment mode, students? Yes, Sanjay, what should be the payment mode? Very good, Sanjay. It should be by account pay. What else? Yes, Jacob, not on the account pay. What other things are there? Electronic mode. Very good, Geeta. Yes, Jay. UPI, RTGS, NEFT. Very good, Jay. So, account pay check, the UPI, RTGS, NEFT, electronic mode are also permitted. This is by a cross check, not an account pay check. So, the expenditure will be disallowed. 30,000 being the value of the gold jewelry received as gift from a manufacturer for achieving the sales target. Yes. Geeta, this is not an expenditure, so this is any which ways not a question of allowability. Yes, Sanjay, what it should be or how this should be treated. Very good, Leela. Under which section, Leela? Very good, Sanjay. It should be treated under 28.4. Very good, Leela. No adjustment, Jacob. Yes, good. So this 30,000 is the benefit or perquisite, which should be taxable under 28.4. So what is the provision saying? Any benefit or perquisite arising in the course of business. So here, since this has already been included in my income, this is already included in my income, so no adjustment is required. Are we clear? Okay. Depreciation amounting to 15,000 on motor car bought and used exclusively for business purposes, but registered in the name of Mr. H, who is the partner. Yes, Jacob? Allowed, no adjustment. Allowed, yes. Good, Sanjay. Can somebody give me the reason what you will write in the note? See, you have to write in the notes. Even when you are saying it's allowed, you have to write in the notes. What you would write in the notes, can somebody just tell me that? Yes, Geeta, very good. So, depreciation on the motor car, which is used for the purposes of the business, though it is not registered in the name of the firm. Yes, Jay, very good. It will be allowed to the firm as per decision in the case of Mysore Minerals. Now, if you remember the case, very good. If you don't, it's still fine. Okay. Next is depreciation of 37,500 of a new machinery bought and installed for the manufacture of pen at a cost of rupees 5 lakh. Additional depreciation, very good. Geeta, very good. Sanjay, yes. You have to take additional depreciation because this is in the manufacturing of pens. Right? So this is already reduced, normal depreciation. So no effect for this, but you will get an additional depreciation of 10% on 5 lakh, not 20%. 10% for 6 months. What will happen to the balance 10%, Jacob? Next year. Very good, Sanjay. You will take it in the next year. So you have to write this in examination. Don't just keep it in your head. Write that the depreciation will be allowed for the asset which will be restricted to 50% of, don't write in exam 10%. Right? 20% additional depreciation will be available under section 32(1)(2)(a). However, this shall be restricted to 50% since the asset has been put to use for less than 180 days. The balance 50% will be allowed in the next previous year. This is how you will write the note in exam. Interest amounting to 25,000 received from the bank on fixed deposits made out of surplus fund. Yes, Jacob? Yes, Sanjay, why IFOS? Yes, Jacob, why do you think it's IFOS and not PGBP? Why is it not a business income? Geeta, don't write the word disallowed. Disallowed is to be used for the expenses. You have for incomes, you have to say not to be included here. Okay, Geeta? PGBP because business funds use. No, Jay. So here I will see when you're answering, that's how you will now get corrected. Jacob, yes, it's not related to business. Very good. So this interest is on the surplus funds. If the interest was, let's say for example, earned on the fixed deposits which were kept as the guarantee money for getting the letter of credit, then what it would have been? PGBP or IFOS? PGBP. Because this was the business necessity. So in order to obtain the letter of credit, you have to keep certain amount as fixed deposit. So any interest earned is PGBP. But here, Jay, this is not earned on the business purpose. This is earned on the surplus money. So this was earned with respect to generating the interest income. Right? So this will be taxed under income from other source. So what does 56 says? Interest income not chargeable under any other head shall be chargeable under IFOS. So this is not chargeable under PGBP because this is not relating to the business. Are we clear? Okay. The firm furnishes the following information relating to it. Closing stock was valued at 60,000 as per the method of lower of cost or NRV consistently followed by it. The NRV of the closing stock was 65,000. Let me see who answers from all of you. And I need with the correct provision. Read the start of the question carefully. No, Sanjay. Yes, Chekhov. Very good. Yes, Geeta. Very good. Yes, good. What is the provision on the basis of which you are saying? So, ICDS 2. Valuation of the inventory. Yes, Sanjay. Yes, Leela. Correct. So, ICDS 2 valuation of inventory. What does it say? In the case of the dissolution, the closing stock has to be valued at the NRV, not at cost or NRV, whichever is lower. The exception to that rule is in the case of dissolution, the inventory has to be valued at NRV. Here, the closing stock has been valued at 60,000, which is the cost. But I have to value it at NRV, which is 65,000. So what I will do? I will add 5,000 because closing stock should increase my profit. Are we clear? Yes? Okay. Brought forward business loss relating to 24-25 was 50,000. This we'll see later. The fair market value of the capital asset as on 20th April 2025 was 20 lakh and the cost of acquisition was 15 lakh. What do we need to do with this information? Yes, Chair. What will happen with this information? Why is this given? Yes, Sanjay. But do you charge it to this year? Yes, Jacob. Yes. What do we do, Jay, with this information? Why is this given? Why do you think it is given? Yes, Geeta. Good. So what does happen on dissolution? Yes, Jacob, what do you think should be the point of giving this information? Why is it given? What do you think? Let's say you are sitting in the examination. What would you do? Yes, Geeta, very good. So, this is given for the purposes of section 9B. 9B gets attracted on the dissolution of the firm. Yes or no? However, would you charge to tax in this year? Yes, Sanjay, you are correct. It will be charged to tax in the next year because the taxability point for 9B is when the assets are received. When the assets are received. So, if you read the start of the question, it says the firm was dissolved on 31st March. However, the capital assets were distributed on 20th April 2025. And what does the 9B says? When does the 9B get triggered? Yes. Nine B gets triggered when the specified person receives the capital asset. It is receiving the capital asset on which date? On 20th April 2025. So 9B will be charged in which year? In the next previous year. So this information is not relevant at this point in time. So the capital gain will be calculated on 20th April 2025. Are we clear? Yes. If suppose it happened in 2024-25, then what adjustment do you need to make? Then you have to calculate the capital gain, Geeta. What will be the capital gain? 20 lakh minus 15 lakh. 5 lakh will be chargeable under section 9B. Will 45(4) be attracted in this case, Jay? Whether 45(4) is attracted in this case? What do you think, Jay? No. Why is it not attracted, Jacob? Why 45(4) doesn't get attracted? Yes, Jacob, what do you think? Because it is on reconstitution. Yes, Geeta, correct. 45(4) gets attracted on only reconstitution, not on the dissolution. For dissolution, only 9B is there. Okay? Now, coming back to the remuneration. So, they have paid a salary of 1,25,000 to HNG. What will happen to this? First, we will add back. Now, you have to calculate the revised remuneration for me. So, this is the book profit coming to 6,55,000. So, what will be the remuneration? Calculate, please. Should we deduct the business losses before calculating the remuneration? Yes, Jacob. Should we reduce the business losses before calculating the depreciation? The remuneration? No, Leela, right. We should not be deducting the business losses before the remuneration. Yes, Geeta, correct. Yes, Jay, correct. So it is 5,73,000. On first 6 lakh, 90%. On the balance, 55,000, 60%. So it comes to 5,73,000. So what will be allowed? 1,25,000 was paid to each partner. The total remuneration comes to 570. So what will be allowed as deduction is 2,50,000. 1,25,000 into 2. So that what has been paid will be allowed. And then you will set off the business losses. Is this question clear to everyone? Yes, any questions? Okay. So this question is clear. Let us solve one more question from the module. Victory Polyfibers, a partnership firm, has earned a GTI of 300 lakhs for the year ended 31st March 2025. The firm has not undertaken any international transaction or the specified domestic transaction during the year. The above income includes a profit of 220 lakhs from an undertaking having a turnover of 80 crores. This is the fifth year and a deduction under ICAI is available to the extent of 200 lakhs. There are some grey areas in the taxation workings and hence the assessee is contemplating to file the return of income on 7th December 2025 after seeking the clarification from the tax experts. Advise the assessee firm by working out the total income and the tax payable where the return is filed on 31st October 2025 or when the same is filed on 7th December 2025. What is the practical solution as regards obtaining the clarifications which might or might not have an impact on your total income? You may ignore the interest under 234A, B, C and F while making the computation in support of your advice. First of all, tell me what is this question asking you to do? What are we supposed to do in this question? Yes. Return should be filed. Yes. ICAI deduction related. Yes, Geeta. So, here the question is testing you on two counts. One, what if the return is filed late? So, what happens when the return is filed late? If the return is not filed by the due date of 139.1, what happens? Will you be able to claim the deduction? The answer is no. The ICAI deduction will not be available. Yes, Jay, very good. Yes, Sanjay. So ICAI is not allowed in that case. And what is the due date for this particular partnership firm? How will you consider due date? Whether it is 31st July, whether it is 31st October, what will be the due date for this firm? What is the due date? 31st October. How do you say that, Jay? Yes, Jacob, what is the due date? Because ICAI audit should be. No, Jay, that's not the correct reasoning. Jacob, what is the due date? Yes, 31st December. No. Why 31st December will be the due date, Jacob? That's a belated return. 31st December is for the belated return. Yes, Jay, very good. 44AB gets attracted. Very good. So, since the turnover is more than rupees 80 crores, is more than is 80 crores, the turnover is 80 crores. In this particular case, it is more than the threshold of the tax audit. Right? So, in that particular case, there will be the Due date of 31st October. Are we clear? So, second count here, what the question is testing you is on the AMT provisions. Because if you are claiming ICAI, you will be liable to pay the AMT on that. Right? So you have to calculate the AMT on that. So let us solve this question. First, if the return is filed by 31st of October, what will be the total income of the assessee? What will be my gross total income? It is given in the question. What is the gross total income? It is 300 lakhs. Given in the question itself. You don't have to break your heads. 300 lakhs, right? This is the gross total income. This is the gross total income itself, right? That is 300 lakhs. Out of 300 lakhs, you have to now reduce the ICAI deduction. What will be the ICAI deduction? 200 lakhs. Again given in the question itself. Again, you don't need to break your head. 200 lakhs is given. Correct? So, 300 minus 200 will give you the total income of 100 lakhs. What will be the tax liability? Can you calculate it for me? What will be the tax liability? Very easy. What shall be the tax liability? Will there be surcharge? Yes, Sanjay, very good. Yes, Geeta, good. No surcharge because the income has not exceeded 1 crore. So 31.2 is the income tax liability. Now calculate the AMT for me. What will be the AMT? What will be your adjusted total income? What will be my adjusted total income, students? What shall be the adjusted total income? 100 plus 200 J. Yes, Geeta. Very good. 100 is the total income plus deduction and the ICAI will give the adjusted total income of 300. What will be the AMT, Leela? What will be the AMT? 18.5%. Yes, Geeta. Yes, Jay. Very good. Will there be a surcharge here? Yes, Geeta. Very good. Will there be a surcharge? Yes. There will be surcharge of 12%. Yes, Sanjay. Surcharge of 12% since the income exceeds 1 crore. So, my total AMT comes to 64.65 lakh. So, should I be paying the normal tax or AMT? I should be paying the AMT. Yes, because my AMT is higher than the normal tax. But I will also get yes. What do I get when I pay the AMT? Yes, Jacob. Credit of AMT. Yes, Jay. Correct. For 15 years. Very good, Geeta. So, AMT credit will be given. What will be my AMT credit? Yes, Leela, what will be my AMT credit? $33.45. Yes, Jay. Yes, Sanjay. Very good. So that will be my AMT credit. Correct? Now, this is the first part of the question. Second part, where the firm files its return on 7th December. What will happen in that case? Then you will not get ATIA. So what will be your tax on? What will be your total income then? Yes, Jacob, what will be my total income then? 300. Directly, Sanjay. Yes, good. On 300, what will be my tax? 30%. Yes, 104.832 lakh. Yes, correct, Jay. You will also have a surcharge of 12%. You will have a surcharge of 12% since the income exceeds 1 crore. So what is better for the assessee? Yes, Sanjay, what is better for the assessee? Filing the return within the due date. Yes, that's correct. Because then he can claim the deduction. Even if he claims the deduction, he will end up paying a MAT which is much lower than the normal tax liability if he files the return after the due date. And in case obviously there is any change in the position, he can file a revised return. Plus he will get a AMT credit. So therefore it is advised to the firm to pay before the due date of the return of income. Are we clear? Yes. Okay, let us solve one more question before we go on to the break. PQR LLP, a LLP set up a unit in SEZ in the financial year 1920 for production of washing machine. The unit fulfills all the conditions of section 10AA. During the financial year, it has also set up a warehousing facility in district of Tamil Nadu for storage of agricultural produce. It fulfills all the conditions of 35D. Capex in respect of warehouse amounted to 75 lakh, including the cost of land of 10 lakh. The warehouse became operational with effect from 1/4/2024 and the expenditure of 70 lakh 5 lakhs was capitalized in the books as on that day. Relevant details for the financial year 24-25 are given. Profit of unit located in SEZ 40 lakh. Export sales of above unit received in India and convertible foreign exchange on or before 30th September 80 lakh. Domestic sales of above unit 20 lakh. Profit from operation of warehouse facility before considering the 3580 deduction is 1 crore 5 lakh. Compute the income tax including the AMT of PQR for assessment year 25-26. First tell me what will be my total income or how my total income will be computed. First we'll talk about the unit of SEZ. What is the profit of unit in SEZ? 40 lakhs. Yes. How would I compute the 10AA deduction? What will be my 10AA deduction? Yes, Jacob. What will be my 10AA deduction? No, Geeta. Yes, Leela. How will you compute the 10AA deduction? Yes, Jacob. Very good. Yes. Yes, Leela. For first 5 years, 100%. Very good. Yes, Geeta. Now you are correct. Yes, check Jay. Yes, very good. So, how will you compute the deduction over here is profit of the unit in SEZ into the export turnover divided by the total turnover. And what will be the deduction? Yes, what shall be the amount of deduction, a percentage of deduction in this case? Yes, for 10 AA, what is my percentage of deduction? %50. Yes, correct. So here this has been set up in 1920. Right? This has been set up in 1920. And for the purpose of the deduction under 10 yes, so in that particular case, it will be 50%. This shall be 50%. Are we getting this? So, in this particular case, you will get the 50% deduction. Are we clear, students? So, 10 AA is giving you the 50% deduction. So, don't claim 100% entirely. Are we getting this particular point? So, for first 5 assessment year, it is 100%. For the next 5 assessment years, it is 50%. Okay. So, profit of unit in SEZ over here is 40 lakh into 80 lakh. Now, the export sales have been received in convertible foreign exchange within the 6 months from the end of previous year. So, I will take that and divided by the total turnover will be 80 plus 20, 1 crore into 50% of that. Because this has been incorporated in 1920. So 1920, now this is for the previous year 24-25. So I will take 50% and not 100%. Is it clear, Leela? So you were right that it is 100% for first 5 years. But the first 5 years have already lapsed. So here it will be 50%. So that will give me my deduction under section 10 AA. Clear? So that will be 16 lakh rupees. Now coming to 35AD. Under 35AD, what is my profit given here? 1 crore 5 lakh. Directly it is given. Now what will be my 35AD here? What is my 35AD? Yes, 65 lakh. 35AD will be 65 lakh. 75 minus 10. The cost of land will not be included. And even the expenditure incurred prior to the commencement of the business shall be allowed as a deduction under 35AD if the expenditure is capitalized in the books of accounts as on the date of commencement of the operation. So yes, Sanjay. So you have to write that specifically that the deduction of 100% of capital expenditure is available under 35AD, right? If the expenditure is incurred wholly and exclusively for the purposes of specified business, including the expenditure incurred prior to the commencement of the business if the same is capitalized in the books of accounts as on the date of commencement of operation. However, for the expenditure on the acquisition of land shall not be included. So here 65 lakh, 100% of that would qualify. Are we clear? So how will I present it in the exam? Profit of unit located in SEZ 40 lakh. Profit from operation of warehousing facility 1 crore 5 lakh minus deduction under 3580 because this is given under the head PGBP itself. 65 lakh. This will give me my PGBP 80 lakhs less deduction under 10AA 16 lakh. So you will not do like profit of unit in SEZ minus deduction under 10AA. Don't do like that. That is not how it is given. Because 10AA is not forming part of the PGBP chapter. 10AA is forming part of separate chapter. It is a deduction from the income. 35AD is the expense deduction under the PGBP. Are you understanding? If you make a wrong disclosure, you will lose out on marks. Are you getting, students? So wrong disclosure or the wrong presentation will also reduce your marks in the examination. So this is how you have to present it in the exam. So it will be appearing something like this in your examination. Yes, it's with 40, profit from operation 1 crore 5, deduction under 35AD less 65 lakh, business income from warehousing facility 40 lakh and my PGBP is 80 lakh. This is my gross total income also. Less deduction under 10AA 16 lakh. Are you getting this point? That will give my total income 64 lakh on which I will pay the tax under normal provision at the rate of 30%, which is going to be 19 lakh 20,000, no surcharge. Education says 76,800 and total tax liability this. Are you clear, students? This is how you have to present. Don't do the deduction from here in the unit in SEZ. Because deductions are separately under the separate section, not under the head PGBP. The 35AD deduction is an expense deduction under PGBP. Are you understanding the difference? This is the income deduction under 10AA. Yes or no, everyone? Yes? So do not make this mistake in the exam. Now, how will you compute the AMT? What will be my adjusted total income? Yes, Jacob, what will be my adjusted total income? Yes. No, Jay. How 105 lakh is the starting point for you? No. Yes, Geeta, very good. But Geeta, you have missed out one point. You have to attempt. That day only we discussed AMT. Yes, Jacob, what will be the AMT? Yes, very good, Geeta, very good. You have got on point. Yes. Now try attempting and calculating over here. Make an attempt. Yes, Sanjay. What will be my adjusted total income? Yes, Jay. What will be adjusted total income? You have made one mistake. Yes, Leela. Okay, so what will be our starting point? Very good, Leela. Very good. Very good. You have got the correct answer. So what is the AMT, Leela? 64 lakh will be the starting point. Yes, good, Jay. We will add the deduction under 10 AA, 16 lakh. Very good. Yes, Geeta, very good. And we will add back the deduction under 35 AD, 65 lakh. Very good. Minus, yes, Jacob, good. You will start with total income. Minus, you will do the depreciation on the building. So, adjusted total income will be my total income 64 lakh. Add the deduction under the 10 AA, 16 lakh. Okay. Add the deduction under 35 AD, 65 lakh. But you will allow a notional depreciation under 32 on this building. Because if you have not claimed 35 AD, you would have still been eligible to claim a depreciation. So 10% on this building, 6,50,000 comes to 58 lakh 50. 1 crore 38 lakh 50,000 will be my adjusted total income. On that, AMT will be, yes, Leela, have you calculated AMT? Yes, Chair. 29.84509. That's right. So you will have a surcharge of 12% since your adjusted total income is more than 1 crore. So you will end up paying the AMT because that is higher than your normal tax. Also here see, this 65 lakh, they have assumed it is entirely on building. Because it is not given that whether it is on building only or it is on machinery or what it is on. So here they have put a footnote that it is entirely on building. It's an assumption. You have to write the assumptions like this in the exam. And you will get a MAT credit, sorry, AMT credit of 29,84,510 minus 19,96,800, which comes to 9,87,710. Is there any reference to section for deducting depreciation for calculation of any? No, Jacob. You have to just refer to section 32 itself. Are we clear with this question, students? Yes? Jay, you have a doubt in NR taxation. Jay, your doubt is valid. For NR taxation under 115 AD for FPIs, the rate is given 10% in the Act. But in the ITR utilities, 12.5%. While module has 10%. For exam purposes, should we apply or 10 or 12.5? 10. Because last year, Jay, when the LTCG rate was revised to 12.5 for all other assets. The income tax department last year missed an amendment in 115 AD. So when you see the ITR utility, they are taking 12.5% because in the next year that amendment was also carried out in 115 AD. But since your module pertains to the last year, your attempt is also for the carrying the FA 2024 amendment, so you should only apply 10% as per the module. Okay, Jay? Fine. So with this, let us take a break of 10 minutes and then we get back. And then we'll solve few more questions on the partnership and then we'll move further. Okay? Let us take a break of 10 minutes and then we get back. Okay. So students, first let us finish the other topics and then we'll start solving the question. Let us now move towards the next topic, which is the AOP BOI. Okay. So what is the tax rate for the AOP BOI? Yes. What is the tax rate for the AOP BOI? Slab rate. Yes, as applicable to the individuals. Yes, good Jay. Yes, Geeta, correct. So the slab rates as applicable to individuals is applicable to AOP and BOI, either under the normal tax regime or under 115 BAC. There is an exception to the AOP BOI that the co-owners of the house property cannot be assessed as the AOP or BOI. Yes or no? So the co-owners of the house property cannot be assessed as the AOP BOI. Right? That is the exception under section 27 itself. Yes or no? Then what is the surcharge which is applicable to AOP BOI? This has individuals. But there is one exception again over there. What is the exception? Yes, what is the exception? In the case of AOP BOI, if all the members are company, then the maximum surcharge is 15%. Yes. Or if the income is taxed under 111A, 112A, 112, or if it is in the nature of the dividend. Yes or no? So if the AOP has only company as members, then in that particular case, the maximum surcharge shall be 15%. Now, how do you compute the income of the AOP? Where the shares of the members are known, then the total income of any member, if it is greater than basic exemption limit. What is the basic exemption limit? The basic exemption limit either as per the new regime, which is 3 lakh in your case, or 2.5 lakh if it is normal tax regime, or 3 lakh if it's a senior citizen, 5 lakh if the very senior citizen. Right? If any total income of the member, any member is more than basic exemption limit, excluding the share of the AOP, and if any member has a tax rate greater than the maximum marginal rate, for example, a foreign company, then the portion of the income attributable to that member, the AOP will be taxed at the rate greater than MMR. And on the balance income, AOP will pay the tax as per the MMR. And the member share will be exempt under 86. Alright? And if no member has a tax rate greater than MMR, then AOP will be taxed at MMR. What is the maximum marginal rate, students? What is the maximum marginal rate? It is 39% under the new regime and 42.744% in the old regime. Right? And if the member share is exempt and if a member is a company, then whether MAT will be applicable on the share of the AOP? Yes. If the member's share is exempt because the AOP is paying the tax, then whether member will be paying the AMT if the member is a company? Yes or no? No, right, Geeta? Very good. So, under the adjustment to the book profit, there is a specific adjustment that the share of the member from the AOP whose income is exempt has to be excluded. Do we recollect this? Share of the member where no tax is payable under 86 has to be excluded. So, no MAT is payable in that particular case. Are we clear? Yes. And where the shares of the member are known. And if no member has an income greater than the basic exemption limit, then AOP will pay the tax as per the slab rate, either under 115 BAC or under the old regime. And in that case, the member's share will be included in the income under section 67A and the rebate will be allowed to the member under 110. And where the shares of members are unknown. And if any member has the tax rate greater than MMR, then AOP will be taxed at a higher rate as applicable to that member. And if no member has a tax rate greater than MMR, then AOP to be taxed at MMR and the member's share will be exempt under 86 and no MAT will be applicable if the member is a company. Right? Let us solve a question on this from the module. Okay, before we move toward the question, one more point. The AOP cannot claim the remuneration and interest paid to the members of AOP. That is specifically disallowed under section 40BA. Unlike the remuneration and interest to the partner of a partnership firm, the members are not allowed any remuneration or interest to the members of AOP is disallowed. So if interest or remuneration is paid to the members of AOP, that will be specifically disallowed. But if it is paid to the members in the individual capacity, not as a partner of the or member of the AOP, then it is allowed. Because then it is not covered under 40BA. Or if individual, but is paid to the wife of the individual or paid to the individual for the loan given by the wife of the individual, just like we saw in the case of partnership, then again that is not covered by the rigors of 40BA. Clear? Now in respect of the rebate, how do you calculate the rebate in this case where no member has the income greater than basic exemption limit? So first, you compute the share of income from AOP or BOI, excluding any interest, remuneration, commission, and apportion it under the same heads of income as characterized in the AOP's hand. You will add interest remuneration and you will less any interest on loan taken for investing in AOP or BOI. That way you will get the total income, you will find the tax on total income, you will find the average rate of tax, and the rebate will be the total income from AOP or BOI into the average rate of tax. Right? This is how you will be calculating the rebate under 110. Okay? Yes or no? Shall we solve a question on this point? Okay, let us solve a question from module. JK Associates is an association of persons consisting of two members, J aged 40, K aged 37. Share of the members are J 60%, K 40%. Income of the AOP is 11 lakh. J and K's other than income from AOP amounts to 2.5 and 2.9 lakh respectively. Compute the tax liability of the AOP, assuming that the J exercises the option to shift out of default tax regime and the AOP and its member K pays the tax under the default tax regime under 115 BAC 1A. So first let's talk about the AOP. How will you tax the income of the AOP? How will the 11 lakhs get taxed? Slab rate. Why slab rate, Geeta? Both member basic exemption limit not crossed. J, yes, very good. So if the shares of the members are known, yes, shares of the members are known over here, and both the members amount of income from the AOP, the total income excluding the share from the AOP is 2.5 lakhs. He has opted for normal tax regime, and here it is 2.9 lakh. He has opted for default tax regime. So the slab rate is 3 lakh. So it is not crossing the basic exemption limit. And therefore the AOP will pay the tax as per the slab rate. Now what will be the tax rate? How will be the tax calculated for AOP? What is the tax liability coming to on lakh? What is the tax liability of AOP? Calculate it for me. 67,600. Yes, Jay, correct. It is 67,600. That's right. 67,600. Now, with respect to J, how will you compute? 2.5 lakh is the other income. In the 11 lakh, 60% is his share. So, how will you calculate? 6,60,000 is the share of profit from AOP. Income from other sources is 2.5 lakh. So, total income for J will be 9,10,000. What will be his tax liability under the normal tax regime? Calculate the tax liability for J. Yes. For AOP, you have the default tax regime because the AOP has not exercised the option to opt out. So Geeta, if the AOP has not exercised the option to opt out, it will be as per the default tax regime of 115 BAC. Yes, check, correct, 98,280. And there will be a rebate of, so how will the rebate be calculated? So 9,10,000, the total tax liability comes to 94,500 and a cess of 3,780. 98,280 is the total tax liability. Your average rate of tax will be 98,280 divided by 9,10,000, which will be 10.8%. Yes, Sanjay, correct. And you will get a rebate. Now, how will you calculate rebate? 10.8% into 6,60,000 will give you 71,280. So that is your rebate under 110. So the tax liability comes to 27,000. For K also it will be similarly 2,90,000 income from other sources. Share of profit from AOP 40% of 11 lakh 4 lakh 40. The total income comes to 730. So the tax liability comes to 23,920. Your average rate of tax is 3.277% and multiply this with 440, you will get 14,419. That is your rebate. So 9,501 is the tax liability. Are we clear? Yes, Jay, very good. Yes, everyone. Is this understood? Yes or no? Yes? Okay. Now the last 2-3 topics are remaining, which is the taxation of the HUF. How is the HUF taxed? What are the tax rates for the HUF? Yes. What are the tax rates for the HUF? Slab rate of individual. Either you opt for 115 BAC or the old regime. What is the surcharge for HUF? Yes. What is the surcharge for HUF? Same as individual. Very good. Yes, Sanjay. It's same as the individual itself. Okay. And do you get 87A for the HUF? Rebate under 87A? Is it available to an HUF? No. Geeta, it is not available to HUF. It is only available to a resident individual. Okay. Now, how do you compute the total income of the HUF? So, any income from property transferred to HUF for inadequate consideration. Any income when the member of the HUF transfers the property to the HUF. This income will be considered as the income of the yes, member. Yes, Leela, very good. Yes, Sanjay. Because of the clubbing provision. So income from the transfer of property by an individual into the HUF will be clubbed in the hands of the individual, where the property is transferred without any consideration or for inadequate consideration. Are we getting it? So in that particular case, the clubbing provision gets attracted. And if the member receives any income from the HUF, whether it is taxable in the hands of the member, exempt under section 10(2). Yes, Geeta. It is exempt under section 10(2). So any income from the HUF received by the member is exempt in the hands of the member. Are we clear? Yes. And if a member receives any remuneration from a company or a partnership firm out of the funds of the HUF, if the investment has been made into that partnership or the company, that remuneration will be considered as the income of the. So when the member receives the remuneration from the partnership firm in a representative capacity of HUF, in whose hands it will be taxable? HUF or in the hands of the member? HUF. Because the HUF got this even though the member was representing HUF in a representative capacity, but this is the income of the HUF, not of the member. If the member has made the income or given the loan or earned the remuneration in his personal capacity, then it is the income of the member. Otherwise, this is the remuneration of the HUF. Are we clear? Yes or no? Fine, students. Okay. So, income from the remuneration, interest which is there is going to be considered as the income of the HUF if the member is just representing. Okay. Then in respect of the HUF, just remember this point that whatever if the assets are given by the individual into the HUF, the income will be taxable in the hands of the member itself because of the 64(2). Okay? Because the property has been transferred out of the inadequate consideration. Okay? And there will be taxability under 64(2). Fine. Any questions, any doubt? Okay. Then where the karta carries on the business, right? In the name of the HUF, it will be considered as the income of the HUF. So if a karta runs a, let's say, store in the name of the HUF, then that will be considered as the income of the HUF. Okay? If he does the business in his own name, then in that particular case, yes. Can HUF carry forward or set off losses? Yes, Jacob, they can. Yes, if the karta carries on the business in his own name out of the funds borrowed from the HUF, then whose income it is? HUF? No. If the karta as an individual, yes, Jay. So if the business is carried on by a co-partner or karta out of the funds borrowed from HUF, only the funds have been borrowed. But what they are doing as a business is their own technical skill. So it will be the income of the individual itself. Are we clear? Any question? So when it is a skill compensation for your own skill, it has to be assessed as the income of that. But where the remuneration received is only just because out of the efforts of the HUF, then it is the income of the HUF. So where they receive the remuneration in their personal capacity, then that's a different story. But if they receive it out of the efforts put by HUF together, then it's the income of HUF. J, in rebate under 87A, in case STCG in 115 BAC, what should we do as per ITR utility or act or judgment? You should go as per the act, J. You should not go as per the utility. Utility had a problem. Okay. And there have been many judgments wherein it has been accepted also. Okay. Any question, any doubts? Okay. Now, next is if the salaries are paid from the HUF to the member or karta, whether the deduction of expenditure will be allowed to the HUF. Jay, you can mention both the alternative, but you can also rely on the act. Yes. If the remuneration is made to the member or karta, is it allowed as a deduction? Allowed. Yes, Jacob, very good. Yes, Sanjay. Yes, Leela. And this will be considered as the income of the member or the karta. Yes, Leela. Yes, Sanjay. Good. Okay. So that is how you have to consider the provision of the HUF. Now, if HUF receives a gift, whether 56(2)(10) is applicable to them? Yes. But if the gift is received from the relatives, like co-partner or karta, then 56(2)(10) is not applicable in the hands of the HUF. Okay? Fine. Okay. Then the next is taxation of the mutual concerns. What is the principle of mutuality? What does it say? What does the principle of mutuality say? Income not taxable, Sanjay. Yes. Why this income is not taxable? Yes, Geeta, correct. Cannot, yes, Sanjay, correct. One cannot make the profit from one own self. That is correct. So one cannot earn the profit from one own self, and that is why the mutuality is exempt, like the income of the clubs, income of the cooperative societies, income of the gymkhanas. These are exempt because one cannot make the profit out of one own self. That is the concept of the mutuality. So you would see that there are many decisions in this regard wherein it has been held that one cannot really make the profit out of, let's say, for example, membership fees. So when the membership fees are given, it is for to be used for the benefit of the members itself. So there, this is not considered as a taxable. There are many judgments in this regard. In your module also, it has been given. There are many judgments which are given here specifically. So let us look at few of those judgments. One second, let me just open it. Yeah. Sikandrabad. Yes, very good. Geeta. Very good. You are remembering the judgments. Sikandra Club, wherein the question before the Supreme Court was that whether the interest income, which is derived from the fixed deposits, which are kept by the member banks of the cooperative bank or this member banks of the Sikandrabad Club, is governed by the principle of mutuality and therefore not taxable. Don't write the word exempt, write the word not taxable. So here the club had deposited the funds with the member banks who were the members of this Sikandrabad club. The banks were the members of this club. So it claimed the interest earned on the deposits as exempt on the fixed deposits. So the Supreme Court said there has to be for the mutuality a complete identity between the one who is contributing to the fund and one who is benefiting from it. And the action of the contributors and the beneficiaries must be for the furtherance of the object of the club. So this club was functioning as a club, right? So here, if we apply these particular mutuality principle, the club had kept the deposit with the bank to earn the interest. Now, once the amount is kept with the bank, even though they are members of the club, these funds then would be used by the bank to lend it further to its customer and to earn the interest on that. So the concept of mutuality ends over there. There is no concept of mutuality existing because there is no identity between the participators and the contributors. And the fund is not applied for the object of the club but for the earning the interest income. The bank is not utilizing for the object of the club. The bank is in fact lending it further. So here the mutuality doesn't apply. Okay. Next was non-occupancy charges, transfer charges, common amenity charges, whether these are exempt. Yes, these are exempt because all of these, there is a complete identity between the contributors and the one who are benefiting from it. And therefore here this will be governed by the concept of the mutuality. Where it is a surplus funds, where the interest is earned from the surplus fund in the form of fixed deposit, that doesn't satisfy the concept of mutuality. Okay, but where there are these transfer fees, there are these non-occupancy charges, all of these are governed by the principle of mutuality. There is one section under the PGBP which says that the income derived by the trade association from specific services performed for its member will not be governed by mutuality, will be taxable under 28(3). So if the club is renting out a hall to some members, it is a specific service. If it is collecting, let's say, membership charges for the usage of the club by all the members, that will govern the mutuality. That will be governed by mutuality. But where it is renting out a hall, it is a specific service. Then that will be taxable under 28. There is one more section applicable in the context of the trade associations. Section 44A. What is that? What is section 44A? Yes. What is section 44A? Yes. 44A is that where in the case of the services, general services, which are governed by the principle of mutuality, if the expenditure is greater than the receipts, which creates a deficiency, then a deduction of deficiency will be allowed up to the 1/5 of the, yes, to the 1/5 of the, yes, students. What is the section saying? Sorry, 1/2 of the total income. Yes or no? So deduction of the loss will be allowed, not in respect of specific services. Specific services, any which ways, are taxable and their expense will also be allowed. But in case of general services to member, where the income is not chargeable on the basis of mutuality, if there is a loss, the loss will be allowed up to the 1/2 of the total income. Are we clear? Okay. Next, let's move on to the taxation of the cooperative society. What are the tax rate for the cooperative society? What are the tax rate for the cooperative society? Yes, Geeta, very good. So there are slab rates up to 10,000. Yes, 10%, 10 to 20. Yes, Sanjay, 20%, more than 20, 30%. Yes, and then you have the concessional tax regime applicable for a cooperative society. What is the concessional tax regime? On 115 BAD, 115 BAE. Yes, Sanjay. Yes, Geeta. 115 BBD, 115 BAE. BAD. So 115 BAD is 22% plus 10% plus 4%, similar to 115 BAA. And 115 BAE is only for manufacturing cooperative society, which have commenced the manufacturing by 1/4/2024. Yes, 15%. So it is same as 115 BAB. What is the rate of surcharge in the normal tax regime? What is the rate of surcharge for a cooperative society in the normal tax regime? Yes, same as the company, 7% and 12%. If the total income is more than 1 crore, less than 10 crore, it is 7%. And otherwise, it is 12%. In the optional tax regime, it is 10%. Yes, students, is this clear? Okay. Fine. Any questions, any doubt? Okay. So let us solve last question from the module itself. Also, yes, one more thing, the cooperative society gets a deduction under which section? Chapter 60 deduction under? Yes. Under which section does it get? ATP. Whether AMT is applicable when you claim ATP? No. AMT is not applicable when you claim the ATP. Are we clear, students? Okay, let us solve the question from your module. One second, I think this has become a little slow. Yes. Mr. Harish, age 66-year, running business as a proprietor, furnishes the particular of his income as under. Net profit of 3,65,500 from the wholesale business of textile and fabrics arrived at after charging the expenses in the P&L. Personal traveling expense of 12,750. Allowed, disallowed, under which section allowed? Not allowed. Yes, Sanjay. Yes, Geeta. Under which section? Jacob. It is not allowed. Section 37. Yes, Leela. Very good. This is not allowed under section 37. Purchase of furniture for shop on 13th June 2024 for 25,000 but charged in shop expenses. Yes, Jacob. What will be the adjustment here? Depreciation adjusted, capitalize and charge depreciation. Yes, Sanjay. Yes, Leela. Yes, Geeta. Good. So 25,000 add back, 2,500 will be my depreciation, which I will reduce. He owns a house with 2 floors constructed with the financial assistance of HDFC, out of which ground floor is used by him for self-use and first floor was let out on rent for 8,500 per month from April 2024. The municipal tax for the whole house was 2,500 and the interest on housing loan was 52,000. Both the floors are identical. What will happen? Yes, IFHP let out. What will be the let out? What will be my gross annual value? 8,500 into 12 months. 1,02,000. Yes. And what will be my municipal tax? Will I get the deduction for municipal tax? Yes. Why, Sanjay, we will not get half, Geeta? Yes, we will get half of the municipal tax, 50%. So 2,500 into 50%, I will get, and balance I will not get. Interest paid was 52,000. What will happen to my interest? I will get interest also. For the self-occupied also 50% and 50% against the rental property. And I will get 30% standard deduction. Yes. Okay. He deposited the insurance premium on the life of self, wife 13,500, son and daughter 28, repayment, housing loan 50, and credit card for health insurance of himself and his family. And he has decided to opt out of 115 BAC. So how much insurance premium he will get? ATC, ATD, yes, up to 2 lakh. Yes. So he will get under ATC 50,000, that he will completely get, right, under ATC. And for the housing loan repayment, he has paid the life insurance. For all the three, you will get, right? So it comes to 1,04,000, but will be restricted to 1 lakh. Mediclaim, he has paid 55,000. Whether he's a senior citizen? Yes, he's a senior citizen. So mediclaim we will get is 50,000. Yes, correct. So 1 lakh 50,000 we will get as the deduction. Yes or no? 1,54,000, sorry. And based on that, you will compute his tax liability without considering 115 BAC. Very simple question. Okay, let's move ahead. Okay. P and Q are individual aged 28 and 30 who constitute an AOP, sharing the profit and loss in the ratio of 2:1. For the accounting year ended 31st March 25, the profit and loss of the business is as under. Sales 4,900, dividend from Indian companies, long-term capital gain, cost of goods sold, remuneration to T&Q and employees, interest to T&Q, other expenses, GST penalty, net profit. Additional information. Other expenses include wristwatch constituting 2,500 each were given to 12 dealers who had exceeded the sales quota prescribed under a sales promotion scheme. Employers' contribution to PF of 6,000 to the PF for the month of November was paid on 14th January 2025. 30,000 was paid in cash to an advertising agency for publicity. Outstanding GST penalty was paid on 15th October. The penalty was imposed for non-filing of returns and statements by the due date. T&Q have income from other sources 3,60,000 and 2,32,000. Compute the total income of the AOP for 25-26 and discuss the tax implication of the individual tax member. So let us first compute the income of the AOP. How would you start with the, what will be the tax rate in the hands of the AOP? Yes. Whether the shares of the members are known? Yes. Yes. J, yes, very good. Shares of the members are known. Whether any member has income greater than the basic exemption limit, what is their other income other than the share of AOP? This is the income which is given. This member has income more than the basic exemption limit. Yes. So AOP will pay the tax at the AOP will pay tax at per the MMR. Yes, Sanjay. Right? If no member has greater than income basic exemption limit, then only it will be taxed at slab rate. So we will calculate the AOP's income. Where will you take this dividend? You will start with the net profit. You will take it to income from other sources because dividend is specifically chargeable under 56. Long-term capital gains computed 640 is given. Where will you take this? Capital gain. So we will reduce both of these. Yes. And tax it under the separate head. Then cost of goods sold is, we will deduct it. Remuneration to T and Q. Remuneration to T and Q. Disallowed under 40 BA. Yes. So we will disallow this 1,30,000 and 170. Interest to T and Q. Again, you will specifically disallow. Right? Then other expenses, wristwatches which were given to the dealers. Whether we will consider? No effect. Yes, Geeta, good. What about the employer's contribution to PF, which was paid on 14th January 2025? Allowed. Employer's contribution? Geeta, why not allowed? This has been paid before the year end itself. Employer's contribution it is, not the employee contribution. Employer's contribution, if paid before the due date of filing the return of income, it is allowed under section 43B. So no effect is required to be given. 30,000 paid in cash to an advertising agency. Disallowed under 48(3). Yes, Jay, good. Okay. GST penalty. Disallowed under section 37. Right? So this is how you will calculate your net profit from the AOP. Whether they are said here to calculate the tax liability, they have not said. They have only said compute the total income. So we'll compute the total income. And discuss the tax implication in the hands of individual member. What will be the tax implication in the hands of the members? No problem, Sanjay. Yes, Jacob, what will be the tax implication in the hands of the members? Yes, Jay, very good. Under section 86, this will be exempt in the hands of the members. Okay. Fine. Yes or no, students? Is this clear? Okay. So this is how you calculate in case of this. Any questions, any doubt? I hope this is clear to everybody. Okay. Last question before we close for the day. Question number 12. XY and HUF of Z, represented by Z, are partners with equal share in profit and loss of a firm, Popular Cinevision, which is engaged in the production of TV serials and telefilm. The earlier partnership deed did not authorize the payment of remuneration or interest to partners. The partnership deed was revised on 1st June 24 to authorize the payment of remuneration of 1 lakh per month to each working partner and 15% interest per annum on the partner's capital. X, Y, and Z are actively associated with the affairs of the firm. Profit and loss shows a net profit of 10 lakh after debiting or crediting the following. Interest amount to 5 lakh each was paid to the partners on the balances standing to their capital account from 1st June 2024 to 31st March 2025. Yes. MMR rates, Geeta, it is for the this thing. If you are opting for the old tax scheme, if you are opting for the old tax scheme, then the MMR goes to 42%. Okay. So basically, MMR is your highest tax rate plus the highest surcharge plus the cess. And if you're opting for a new tax scheme, then 39%. Okay, Geeta? 12% interest is allowed. So what will be allowed here? This is 15%. This is paid at 15% per annum. So this 5 lakh is 15%. So what will be 12%? 3 lakh. So 3 lakh will be disallowed. So the excess interest is 3 lakh, right? So that will get disallowed. This 5 lakh is 15%. So by 12% will be 2 lakh. So 3 lakh will get disallowed. Fine. It is paid after the date of partnership deed only. Remuneration to the partners in representative capacity 30 lakh. Remuneration to the partner disallowed. Yes or no? Yes, students. Okay. Interest amounting to 2 lakh paid to Z on loan provided by him in his individual capacity at 16% interest. Allowed. But which other section you will quote here? Which other section you will quote here? 48. Very good, Jay. Assuming this is paid at the fair market value, this interest will be allowed because this is paid to him in his individual capacity. Leela, why wristwatch in question 8 is not allowed? It is allowed. Where did we say it is not allowed? It was allowed, Leela. Royalty of 5 lakh paid to partner X, who is a professional script writer for use of his scripts as per the agreement between the firm and X. The same is authorized by the partnership deed. Geeta, this will not be allowed because the remuneration, when we talk about, it says remuneration includes any commission, remuneration, salary, bonus by whatever name called. So whatever name called will include, even if the remuneration is given for his technical skills of the partner, that will also be subject to 40B. So even if this royalty is paid, that will be subject to 40B. Otherwise, everybody can disguise the name of the remuneration in a different terminology and give it by overriding 40B. So this will also be covered by 40B. So this will also get disallowed first. This will be subject to the limit of 40B. Two separate payments of 18 and 15,000 made in cash on 1st February to Altaf, a hairdresser, against his bill for services rendered in Jan 25, and two payments of 19 and 10 made in cash on 1st February and 2nd February to Priyam, an assistant cameraman, against her bill for services in Jan 25. Disallowed under 48(3), both of them. Fine. Amount of 5 lakh provided in the books as a liability for remuneration to Shreya, a film artist and a non-resident. Tax deducted, was so credited and was so paid on 3rd June 2025. Allowed because TDS has been paid before the due date of filing the return of income. Now see students, here this could have been 3rd August also. So the due date for a partnership firm can be 31st July as well as can be 30th September, depending on whether it is required to give the tax audit or not. If it is liable for tax audit, the due date will be 30th September. If it is not liable for tax audit, the due date will be 31st July. So you have to write accordingly by making an assumption in the exam. Are we clear? Amount of 6 lakh provided as a gratuity for the year on the basis of actuarial valuation. Gratuity actually paid to one retired employee is 1.5 lakh. Six lakh disallow, yes, and 1.5 lakh allow. Very good, Geeta. Very good, Jay. Interest of 1.2 lakh on income tax refund. Income from other sources. Okay. So based on this, you will compute your total income, which will give you the book profit. Sorry, you will compute your book profit, and then you will calculate the remuneration, which is on first 6 lakh 90 and on the balance 60%. Okay. Yes or no? Is this question clear to everyone? Okay. Fine. So with this, we will stop here for today and we'll meet in the next class with respect to assessment of trust. Thank you so much. Yes. Thank you.